Hi, this is David Lee. Happy New Year for 2025. In this short video, I'm going to do a comparison of what I've been telling my students over the last 3 months, especially how I see the market, the strategies that work, the strategies that don't work, where I see especially newcomers arriving on the property market. They've got aspirations of being successful in their property careers, but without experience and with the market the way it is, you really have to tread very warily, because it's just not like the old days where you could buy anything and watch it increase in value. You have to be acutely aware of how the dynamics of the market, influenced by the world economy, by local government rules and regulations, what are the implications on the property strategy that you're looking to implement. As you can see, I've got what I'm suggesting for the upcoming market, and I've suggested to my students themselves what will give them the least grief, the best returns with least exposure. So I thought, comparing my notes with what I've been observing, especially while going around the property network meetings, hearing what people are saying and listening to the 50%, which is typical of newbies that are entering the room and what they're looking to do. So I'm going to compare what I'm doing, looking into the crystal ball, but this time I'm going to listen to 3 other experts in the UK property field that I've known over the last 20 years, and comparing notes as we are reading the signs in 2025. So I've done this for my students. Maybe you need to take time out as well and ask yourself, is what you're doing the same as what you were doing a few years ago? Especially in the last couple of years or since 2020, the market in the United Kingdom has stagnated, and so cash flow is very difficult. There's not capital growth there, and we've got 2 markets. We've got the London market and the outside market, very different, both of them at the same time. So what I did was I explained to my students what's going on, how many people are just repeating the same property strategies. It could be buy-to-let, HMOs, they're doing residential, commercial to residential conversions, and there's talk of instability in the property with the price crash incoming. Is it coming? What are the consequences of much greater interest rates hikes over the last few years? Remember, the Bank of England was only at 0.5% for many, many years. Add on a couple of percent for the banks, the mortgages you were paying out on, and that wasn't too bad. 2 to 3% capital growth, but that capital growth is gone. That 2 to 3% has gone up to 5, 6, 7, 8%, and with the squeeze, with the Section 24 not being able to claim as a business expense what you're paying for your underlying mortgage, it's squeezing the living daylights out of everyone. So I did this comparison, and these were my observations, what I would say 95% of people were doing. What you see in green here is without bank financing. What's in red is with bank financing, and yes, I've included lease options because what people were doing were a short-term fix-up on property with a purchase option, but they're either getting finance to do on a bridging loan, to do the fix-up work before they get it revalued, and getting bank finance. So in the old days when we were doing this, there was no bank finance on lease options, but with everything else there is. What you can't see behind me, it's commercial to residential. So I hear the same thing time and time again, and it's not what I'm doing. I'm doing the exact opposite. I feel very comfortable when I'm not comfortable, and that's what I've been developing and advising why I do that with my students. So comparing, allowing my students to hear what other people have been saying, as it resonates very much. It's as though I've been listening to these people all the time, because we're seeing much the same thing. But what's happening, if you've noticed on Facebook or on Google, many people are going to their training course because they are beginners and they're learning yesterday's property strategies. Yes, we will hear stories. There's always success stories, and depending where you are, and if you go to a network meeting, you'll hear somebody's success stories on the deals they're doing. But it is getting harder and harder to do what we could do in the past, which worked, but the rules have changed, and so that's why I call it yesterday's property strategies, especially if you don't know any different. And finally, I keep asking myself, with the newbies, the beginners, what's the degree of difficulty knowing everything, having a wider picture on what's going on, because they will have limited knowledge. They will see the end result, the benefits, but they don't see the detail of what's going on. And even one of the experts in the videos that I've given, I'll give you links to those videos, and you can hear what they were saying. And they were saying virtually that there's not a big enough margin to allow for everything, to allow for profit, to allow for conversion, or allow for development before getting any rentals done, you don't get the cash flow, and it just doesn't work. And they go and pick up the deals of these newbies that have miscalculated. Keep it simple, stupid. If you want to join the We Buy Houses learning world, do so. I release a video every month, a conference call for paid up members, but I make also a newsletter available to my list of free subscribers. So join up there, keep it simple, stupid, and I'll catch you in my next YouTube video. Thank you.